Hey guys, what's up? Alec back with the daily stock market. Today, we're going to go over a few different stocks that are under $10 per share. So if you're looking for those cheaper stocks and your mindset is on stocks that are under $10 per share, this is definitely going to be the video for you. A lot of people like stocks under $10 per share, even though you can buy fractional shares now virtually on any brokerage. So if you want more cheaper stock videos, make sure you hit that like button on this video. So I know you guys want more of this type of content with the cheaper stocks. Okay, so the first one up is Matterport at $7 per share. All right, we did see a red day in the market today, by the way. The stock market as a whole was pretty much down, and we saw a 6% downward movement on Matterport alone. Now, this is one that's been destroyed in the past few months. I was going to put them on the video with stocks that are down 60% or more. However, it made this video instead. Now, from all-time highs, we can actually see it's down around 80%. So this stock Matterport is one of the biggest downward movements in all the stock market. It was even up to $33 per share earlier this year. There's a huge upside, around 200-300% upside for Matterport. Okay, if we scroll down, I have 76 shares at around $6.50 per share. I think under $7 per share is a great place to be buying. I want to buy closer to $5 per share and get my average cost a little bit lower. I'm prepared to buy a couple hundred more shares of Matterport. Now, as for a little disclaimer in this video, stocks under $10 per share are typically a lot more risky and can move down to $5, $4, $2 per share. So it's a lot more risky when you're dealing with stocks under $10 per share. I've noticed in the stock market with all my experience, most stocks under $10 per share keep continuing to fall and have a hard time recovering. Okay, so do your own research on all these stocks. I'm here to just point you in the right direction. And with that being said, we see a summary on Matterport reported an underwhelming Q4 card recently. Its EBITDA margins look terrible. Nonetheless, Matterport is a short-term play, therefore we are not considered with its near-term weakness. And if you don't know what Matterport is, focuses on creating digital twins of physical spaces in the metaverse. The company believes that it's still very early in this market opportunity. It's focusing on digitizing the real estate market, particularly in the resident segment. And they have patents on this technology, so if you have a home tour, if you ever been on Zillow or Redfin, and you kind of walk through the home digitally, they can make a 3D version digitally of any physical space, which is a pretty cool concept. All right, is Matterport stock a metaverse play? This is the critical question, isn't it, for metaverse investors? CEO RJ shared his thinking behind Matterport metaverse strategy. So you guys can pause the video and read that last slide. I don't want to dive too deep into them because I want to talk about a few other stocks as well. Does Matterport have an optimistic outlook? Perhaps one of Matterport's weakest links is the financial performance. While the story certainly sounds good, it's still a very unprofitable company, which is a red flag. Readers can glean from the company's performance in Q4, which was terrifying for investors. The company's year-over-year top-line growth continued to tepid off, hammered by the supply chain headwinds overcame in camera products. Nonetheless, it's trying to overcome these headwinds by leveraging its smartphone app. So it also put out an app for Android users, which is a really cool thing. You don't actually have to go and buy the camera, the specific camera. Now they have a software you can download straight to your smartphone. And imagine when they release it for iPhone. They haven't done that yet, but I think that could rally the stock price. We must highlight that we consider Matterport a speculative investment, aka risky. Therefore, the near-term headwinds matter little to our underlying thesis. We have shared previously that the company has a viable strategy in the metaverse. It has also continued to forge partnerships with megatech companies. It's undoubtedly facing significant headwinds over the supply chain. However, we believe as the company continues to build its subscription revenue, these are transitory challenges. Therefore, you need to adopt a long-term mindset to consider investing into Matterport. Also, allocate your exposure appropriately as you would for a speculative position. At 10 times revenue, it's trading below high growth peers, median that monitor about 12 times revenue, but Matterport's growth numbers also don't qualify it as a high growth stock of 2022. Furthermore, the consensus price target has also gotten it wrong with significant downward revisions. But despite the near-term headwinds, we believe that the underlying thesis remains unchanged. Furthermore, we believe its valuation has also fallen significantly for investors to consider adding exposure. So with that being said, Matterport down around 70-80%. I think the risk versus reward is getting very attractive for the stock for the next couple months and even the next 6 to 12 months. Like I said, I'm trying to buy as close to $5 per share so I can lower my average cost. We spent enough time on Matterport. Let's jump into the next stock. Next up, we have SoFi Technologies entering the $10 range. Earlier today at the pre-market, it was $11, and earlier this week, it was even up to $13. Okay, so I think if you can buy under $10 per share, and even short-term investors could probably swing trade it up to $13, $14 per share and get a 30 to 40% swing trade growth. Now, this one probably needs a little bit more time for the swing trade, and this is one that's been swing tradability for a while now. As you can see, it popped back up a few times. So I think there's a high probability of SoFi popping back up to around $13 to $14 once again, which again would be a 30 to 40% swing trade. However, if you're not a short-term investor, rejoice because there's long-term opportunities in SoFi Technology as well. They're doing basically everything right now. They beat their EPS earnings the last 2 quarters in a row. They're getting closer to profitability. They're still a negative earning company. So yeah, that does hurt them a little. They're also on the speculative side. Basically, any stock under $10, it's going to be hard not to find a speculative stock that's under $10 per share. This stock's also being traded, exchanging a lot of shares, about 69 million shares exchanging hands every day. You can see the volume right there. The market cap is under 10 billion, which is exactly where we want it. And the next 1 to 2 years, this can definitely double in value to like a $20 billion company or more. Remember, it's not financial advice, just my own thoughts. And you'll also see the 52-week high is $24 per share. So this was closer to a $24 billion company earlier this year. We have a lot of analysts are saying to buy it. Analysts agreeing on a 71% upside the next 12 months, which I think is completely possible. The lowest analyst has them at $14 in the next 12 months, which would still be a 40% increase from the lowest analyst estimates. And you can see where some of these analysts are coming from. They're all 4-star analysts, and they are reiterating their price targets in the last 2 days, 3 days. So overall, I'm continuing to add to my SoFi positions. I have a couple hundred shares and probably looking to double that if it does go under $10, closer to $8 once again. Next one up is FuboTV being destroyed today, down 10% on the day, which is a big downward movement. This stock has also been destroyed in the last 3 months, down 56%. And in the last year, it's down around 80%. All right, a lot of hype was being brought to this one, and it reached about $42, $48 per share in the past. So this one has even more upside than Matterport does, for example, but there is obviously risk associated with it. If you don't know what FuboTV is, they're basically like the Netflix of sports. All right, so they're like a streaming platform, but they mainly focus on sports. It's a pretty good concept in theory, but here we can see that they're a negative earning company, and they've been pretty consistent on their estimated earnings and where their earnings have been taking them. We can also see they're only a $1.1 billion company, so they are on the smaller side, which can indicate there is a lot more growth to come. As far as FuboTV, analysts agree about $14 per share in the next 12 months, which would be a 92% upside, and I agree. I think personally buying is close to $5 per share on Fubo, and under $6 or $7 per share is a great place to start your position, and holding for 6 to 12 months to around $14 per share is definitely achievable. Some analysts have them at $9 per share, so you'll probably have a little bit more risk with this one compared to something like a Matterport. We have a lot of 5-star analysts coming in from Roth Capital, Needham, Evercore, Wedbush, and they are all putting $15 to $20 per share for FuboTV. The next one up is PLTR, Palantir Technologies. They're not quite at $10 per share yet, but that's my buy point, is under $10 per share for them. That's why they're being included on this list. So if they go down another 15, 10%, 20%, I'll definitely be picking up a lot more shares of Palantir. They skyrocketed back in 2021 in January at the beginning of the year to around $35 per share, and they're down significantly from them. I think that this can be a good long-term hold. Kathy Woods recently sold out of this stock pretty heavily, so maybe she sees something that a lot of other analysts don't see. With that being said, there's a lot of risk with this stock. So it looks like they're barely a profitable company, and as you can see, the last earnings report was one of their most disappointing earnings report yet. So that's why the stock ended up falling significantly. We can also see that the market cap is 23 billion, so they're still a rather large company, and with a very spread out 52-week low, 52-week high. Now, if you put your eyes over to the volume and the average volume, the volume today is about half of what the average volume is. So less shares are trading hands, which could mean less supply or less demand in general for the shares. And even with the cyber warfare between Russia and Ukraine, this could be a good one to be looking into as well. CrowdStrike can be another good one. This is probably a good article if you want to read it on your own time. Just type in this exact headline. It's on Bazinga. Chart Wars, Cyber Warfare Edition between CrowdStrike or Palantir, which stock will go higher? And the article should just pop right up. You can also pause this video and read it on the screen here if you like. Let's just take a quick look at Palantir's chart though. Similar to CrowdStrike, Palantir may be forming both a new upward trend as well as a bull flag pattern, with the pole and flag of the formation printing on the same dates. The measured move of Palantir's bull flag is about 27% upwards, which indicates the stock could trade upward to about $14.50 per share in the future. Also, like CrowdStrike, Palantir needs to confirm its new possible uptrend with a higher low. So it needs higher highs, higher lows. The stock may have printed the low on Wednesday, and if so, traders can watch for Palantir to rise above $12.50 level over the next coming days to print a higher high. Palantir has resisted above $13.18 and $14.58, and support below $10.99 and $9.79. So that's probably the sweet spot to be buying, is between $10 and $9. All right, next one on the list is The Honest Company at $5.95, up 6.4% in the past week. However, if we look at the past year, they're down 71% from their IPO. So another stock that has been destroyed below the $10 range. The Honest Company is going to be a good one. I feel like they should be like a safer company. However, they're too new and too unpredictable of what the future holds for them to be a safe company. However, their business model is in the safe category because the stuff that they sell will always be needed. They're kind of like a Johnson & Johnson / Procter & Gamble type of companies. So they sell everything from, baby diapers, makeup, household products that you're using every single day. However, the Honest Company only has like a 1 to 2% market share in that space, where something like Johnson & Johnson and Procter & Gamble, they have closer to like a 20-30% market domination in that space. So the Honest Company has a lot of catching up to do, but that could be a good thing, because if they start taking more market shares over the 1% that they have now, closer to 5 or 10%, this could be a huge growth story with the Honest Company. Here we see the market cap is one of the smallest on this list, only 500 million on the market cap. Very speculative stock, very risky, but could have a huge reward. The analysts also seem to like this stock. The earnings are interesting. They're getting into the profitability. They're getting closer to profitability, and all of their fundamentals honestly look pretty good as well. However, I want to buy under $5 per share, get my average cost as low as possible. And this also, by the way, is going to be a long-term stock. Remember, we're looking for basically a growth story on this one, and it's going to take time for them to get above, $15, $20 per share. However, they could make a quick move above $10 per share. Just make sure that you understand the risks with these stocks. And the last one that we'll talk about in today's video is Virgin Galactic Holdings, ticker symbol SPCE, down 12% today. This is another stock that has been destroyed, just like all the other ones on the list, down around 82%. This is probably the riskiest one on the list, okay, but also has the most short-term potential on the list as well. So if you're a short-term trader, this could be a good one. However, I think it's going to be super risky. Around $15 per share, I think is going to be a good short-term goal. Around a 50 to 100% swing trade is definitely possible for Virgin Galactic. You can see they were kind of forming an upward trend here recently. But then they just fell down on May 10th to 2021, and then they just shot up randomly to $55 per share, and then just downward trended from there on out. There was a lot of hype around this company. They have a negative EPS, but they did beat their expected earnings, and they've been getting more profitable in the last 4 quarters, but we want to see them get into profitability. However, this isn't too much of a fundamental play. This is more of like a momentum stock, and if it gets picked up by the Reddit community once again, or even just the stock market community as a whole, I think that this one can rally up to around $15 per share or possibly higher. This one could hit like 200, 300% gains, possibly. Just remember that this one's extremely risky, but the risk versus reward is getting more towards the appetizing side of things once we see them under $10 per share, closer to $8 per share. If they go to $5 per share, then it'll be a lot more appetizing to sink my teeth into something like SPCE as an extremely speculative play. And I try to keep my speculative plays under 1% of my portfolio diversity, and something like Virgin Galactic, especially if you have like a really large portfolio, you probably don't want to put this over 0.5% of your total portfolio diversity, just because it is that risky. But with risk, typically comes more reward. So you have to kind of balance what kind of investor you are. And if you're a super safe long-term investor, I think there is a spot, at least a couple spots, for some speculative risky plays in your portfolio, as long as you manage it correctly and look at the portfolio diversity and make sure you're not going too heavy into your risky plays. And as long as you delegate a certain percentage of your portfolio towards that riskier stocks, then you're totally fine, as long as you're sticking to your plan and not going overboard. And if you guys don't know how to develop a plan or a budget for yourself, I have one-on-one coaching for you guys programs. Message me on Instagram. We'll develop a plan for you, a budget, and get you investing in the stock market the right way, and a personalized custom budget too, because some people are more risky investors, some people are more safe investors. So we'll go through all that stuff on the one-on-one coaching. If you guys appreciated this video, just smash a thumbs up on it. It really helps me out with the YouTube algorithm. I try to make these videos as often as I can for you guys. So if you appreciate it, smash the like button, comment below. That's all I ask for you guys. As long as you guys keep liking these videos, I'll keep making them for you. Also, check out some of the success stories. Just click success number 4, success number 3, success number 2 on the highlight section of the daily stock market on Instagram. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.